More than half of the people classified as Generation X, or those born between 1965 and 1980, say they won't be financially prepared for retirement. To make matters worse, only 45% said they were somewhat confident that Social Security will be there to support them when they need it. This is according to a survey released Monday by Northwestern Mutual. This, unfortunately, will affect the whole country. Inadequate retirement savings will result in higher public assistance costs, decreased tax revenue, lower household spending, and a decline in standards of living, according to a report done by the Pew Charitable Trusts. The anticipated cost is $964 billion for the federal government and $334 billion for states between 2021 and 2040. So if you have any doubt our deficit will expand, doubt no more. The report revealed that households earning less than $75,000 annually are expected to jump to 43% by 2040. So that cost is going to grow. What's frustrating is that the minor increases in saving habits can make things better and lessen the stress on the federal and state budgets. Pew estimated that saving an extra $140 a month, or about $1,685 annually over 30 years, would result in the elimination of the retirement savings gap and additional tax burden. Of course, if you put all your savings in cash, its value will decline year over year. According to multiple sources, including the Wall Street Journal, Fortune, and Harvard, to name a few, the dollar has lost 96% of its value. The graph on your screen shows the purchasing power of the U.S. dollar since 1913. 1913 is the year the Federal Reserve, which is actually a privately owned central bank, took over the U.S. banking system. As you can see, it's been pretty much downhill since the Fed took over. That means today's dollar would be worth less than 4 cents back in 1913. How does the Federal Reserve devalue the dollar? By printing more money. And we've done a lot of that over the last several years. Printing more money causes monetary inflation. That means there are more dollars in circulation, but because there's more paper money floating around, that doesn't mean more value has been created. All you really get is price inflation. Here's an extreme example. Let's say the Federal Reserve just gave everyone in America $1 million. Wouldn't it be great if everyone in America became a millionaire overnight? Unfortunately, all that would do is force prices to increase. Think about it. How much would you have to pay the plumber to come to your house if he's already a millionaire? That's why you have to diversify. Don't put all your savings in cash. Diversify, invest in stocks, bonds, real estate, and don't forget the most important thing, a hedge. A hedge is an asset that moves against other assets. When stocks and cash are down, your hedge should be up, saving you from having liquid assets at a loss. Gold has clearly outperformed the S&P 500, and even last year, 2022, gold emerged as the winner versus NASDAQ and the S&P 500.